Bitcoin's rush to 120,000 caused a cramp, and the whales ran away. The rebound of altcoins has stalled. Has this round of market ended early? Meme coin contribution 62% income Solana. Why is the founder still blasting it as digital garbage? 60 You can get it for free by locking up your warehouse every day. 110,000 XRP. Nexo is the new activity, a pie or a trap? 758 A billion-dollar time bomb. Changpeng Zhao's BNB positions conceal market risks. Qubic wants to spend money to become the king. Is Monero really about to be bought out?
Tuesday, July 29th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. The recent altcoin market seems to be cooling off a bit. The CMC index has dropped from 55 to 39, sending everyone fleeing to Bitcoin and stablecoins for a summer retreat. Now, only 39 projects remain that can outperform Bitcoin. However, a closer look reveals that many coins have seen incredible growth over the past 90 days. Newcomers like HKEX, PENGU, and SYRUP have soared over 260%, while CFX has also seen a 140% increase. Even established players like ETH, UNI, and AAVE have remained remarkably stable. To put it bluntly, the market is either collapsing or taking a breather, and the fundamentals of altcoins remain strong. Ethereum led its peers in a surge a few days ago, pushing the index back up. Unfortunately, Bitcoin is languishing near 120,000, cooling market enthusiasm. But seasoned traders understand that this pullback is simply building momentum for the next round. As long as the index can hold steady in the 35 to 40 range, altcoins will rebound in no time once Bitcoin takes off. Keep an eye on a few signals. ETH, BTC. The exchange rate is rising, funds are flocking to high volatility sectors, and a few leading stocks are emerging in sectors such as DeFi and AI. This basically means that the market is about to take off. Don't think that this surge in Bitcoin is driven by the enthusiasm of retail investors. In fact, it is the veteran players who hold on and hold on. Long-term holders, LTH, have been quietly increasing their positions since June, laying the foundation for the market. But by the end of July, seeing the price of the currency hit the threshold of $120,000, they could no longer hold back. On-chain data shows that the 30-day net position turned negative for the first time, which means that small-scale cashing out has begun. The most eye-catching thing is Galaxy Digital's sudden sale of over 80,000 bitcoins could be considered the first blow to the current market rally. While the market is holding up well, it's inevitable to wonder, is this a prelude to further institutional sell-offs? Will the market continue to rise, or will it take a breather? Three factors will be crucial. Will established investors continue selling? Is the market able to absorb the surge? Can the $120,000 level be broken? A break could signal a new market trend. A failure might warrant a pause. Recently, there has been a big move on the chain. The rhythm of Bitcoin and Ethereum has begun to synchronize. Within a year, the active supply ratio has both reached 37%. What does it mean? It means that the old coins that were originally lying still have begun to become active. The biggest move was a legendary whale in the Satoshi era. He quietly made a super large transfer through Galaxy Digital OTC and moved out more than 80,000 bitcoins at once, with a market value of more than $9 billion. This is not over yet. According to Look On-Chain Monitoring, Galaxy Digital addresses have transferred out another 3,782 bitcoins in the past 12 hours, equivalent to about $447 million, most of which flowed to trading platforms. As a result, the market did not panic at all, and the price remained stable at around 118,000, which shows that these institutional buyers are really fierce. And it also revealed an old mystery. It turns out that many lost bitcoins are not gone at all, but have been lying in cold wallets, playing dead, waiting for the market to be in place before re-entering the arena. Once these old coins wake up, the market may change in minutes, so don't just focus on the price. The movements of these sleeping funds on the chain may be the real indicator. Please like and follow us to get the latest updates from the cryptocurrency, blockchain, and mining circles within 24 hours. Click the bell to join the channel and become a member. You will receive your membership code from Monday to Friday. Yesterday's latest data shows who is the best at issuing coins on Solana. The answer is unsurprising. Let's Bonk is the clear winner, taking a 76.9% market share. Jup Studio takes 9.8%, and Pump.Fun ranks third with 9.01%. But just after the list was released, Solana co-founder Anatoly Yakovenko couldn't help but comment on it. Anatoly went on a rampage on Platform X. He directly derided meme coins and NFTs as digital garbage, claiming they had no intrinsic value and were driven purely by sentiment. This sentiment was already well documented. In a previous debate with Base founder Jesse Pollack, Anatoly had compared these assets to loot boxes in mobile games, implying that they were all speculation, with the results relying solely on luck and having nothing to do with actual value.
Ironically, according to the latest report from blockchain infrastructure company Syndica, in the first half of 2025, memecoin transactions accounted for 62% of Solana's decentralized application revenue, about $1.6 billion. In the second quarter, network revenue reached $271 million, a record high. In other words, the digital garbage that Yakovenko denigrated is precisely the main force driving Solana's cash flow. Commentator Carbon mocked that shouting technical ideals while relying on garbage to support financial reports is more embarrassing than Vitalik but Aaron's communication style.
Any objectively measurable parameter, it's oftentimes better than Ethereum, and in some ways, like maybe at most only half as good. So like number of validators on Solana is like 3,000, Ethereum is about 6,000.
Whether it is YouTube, TikTok, or early apps, which technology platform does not rely on entertainment content to attract popularity first and then upgrade functions after attracting users? The question is, can public chains take this path? Solana's second quarter financial report has just been exposed. Revenue from meme coins alone accounts for more than 65%, directly washing away the technical filter of high-performance public chains. At this time, Solana founder Anatoly Yakovenko also came out to complain that his own ecosystem is a concentration camp of digital garbage, which is a bit like singing love songs while smashing guitars. Solana will either continue to dance on the goldmine of memes or bite its teeth to change the engine and drive again. But in the final analysis, this drama is not only an embarrassment for Solana, but also a wake-up call for all public chains. When the ecosystem can only survive by hype, the technological utopia can only be used as a slide. You may have heard of many exchanges, but Nexo is definitely the all-around player that looks low-key but is exciting to use. It is more like a 3-in-1 tool in the cryptocurrency world: bank, UA and credit card. Currently, 7 million users use it to deposit coins and earn interest, with an annualized rate of up to 16%. Interest is calculated in seconds and credited daily, making it 100 times more exciting than UA. More than 200 currencies can be used, with an interest rate as low as 2.9%, and the funds will be credited to your account in minutes, which is much faster than banks. You can also spend your money directly without selling or exchanging currencies and get a 2% crypto cashback. It is not lacking in stimulation when it is time to lie flat, and it will not fall behind when it is time to spend money. Of course, it has not been without its share of ups and downs. In 2022, FTX went bankrupt, which directly triggered the SEC's serial hunt, making everyone in the crypto circle feel insecure. Even Nexo announced its withdrawal from some US markets at the end of the year, shut down interest products in 8 states, and stopped new user registrations. But the tide turns, and once Trump returns in 2025, the direction of crypto regulation will suddenly change. Nexo is not long-winded. Taking advantage of the tight liquidity this summer, it directly released 2 sets of XRP incentives, playing a capital hunting game on the chain with completely different rules.
Conservative traders take note. Nexo is launching its first promotion. From July 18th to 31st, users must maintain a net deposit of at least 1,000 XRP over a 2-week period. Any withdrawals during this period will reduce their qualifying holdings. After the August 1st snapshot, positions must remain static for 60 days. Starting October 1st, users will receive a 5% bonus on their net deposit, up to a maximum of 10,000 XRP. High-yield traders can go for this. From July 22nd to August 4th, users can increase their XRP holdings through transfers, credit cards, or redemptions. After the August 4th snapshot, holding for 90 consecutive days until November 3rd will earn a double benefit: 12% annualized interest and a 5% cashback on the principal of your snapshot position.
While Nexo's 2 incentive mechanisms may seem gimmicky, they're actually based on 3 actuarial calculations. First, the so-called net deposit requirement is specifically designed to prevent arbitrage. Internal transfers don't count. Only real money flowing in from outside parties is eligible for rewards. So, do you dare to take the plunge? Second, you must remain completely still during the lockup period. If any on-chain activity is detected, your rewards will be immediately lost, akin to an on-chain nuclear explosion. Only those who maintain stability will reap the rewards. Third, the reward structure is tiered. Conservatives have a guaranteed minimum return of up to 200,000 XRP. But if you're more aggressive, the new uncapped gameplay is tailor-made for you, offering annualized returns up to 32.2%. Don't miss out. With only a few days left before the promotion ends, it's up to you to decide whether to take the plunge or not.
%98 of Zhao Changpeng's wealth is in BNB. Has he made the right bet this time? From dark web PayPal to a regulatory target, can Monero withstand the dual pressures of the black market and regulation?
Changpeng, Zhao, and Binance have been incredibly busy lately, practically working non-stop. First, the US SEC dropped its 2023 lawsuit against Binance and Zhao, effectively clearing the US turmoil. Then, shocking news broke that YZ Labs, the family office run by Changpeng, Zhao, and He Yi, had partnered with 10x Capital to establish a fund management company focused on the BNB chain, essentially investing in its own chain. And that's not all. Binance also partnered with World Free Finance, securing a $2 billion investment from the UAE's National Fund, HKEX, and expanding its business into Pakistan. Even more remarkable, Zhao Changpeng was appointed an advisor to the Pakistan Crypto Council, further bolstering his international influence. All of this coincided with BNB hitting new all-time highs, naturally drawing attention back to this legendary founder of the cryptocurrency world.
Recently, BNB hit a new high of $850.70. Affected by this, Zhao Changpeng's net worth has soared, and the valuation of his BNB holdings has exceeded $75.8 billion. According to Forbes data in June 2024, Zhao Changpeng personally holds 64% of the BNB circulation, about 89.1 million pieces, and Binance controls 7%. Zhao Changpeng once revealed that 98% of his investment portfolio is BNB, and 1.32% is Bitcoin. According to the Forbes list, he ranks 23rd with a net worth of $71 billion, and also holds 90% of Binance shares and BNB reserves.
I know I have enough money to live. I also have enough money to do stuff. So anything I want to do, I have enough money to. Money is an enabler for you to be able to do what you think you need to do. That are, in my case, it's not so much playing golf and all this stuff. That stuff is, I can handle that. But if I want to do a business that helps people or that that have positive impact, I have enough resources. So money is no longer the limiting resource. It's other things. It's talent. It's people. It's health, time. All of those things are limited resources. So I'm much more focused on those things instead of the money power. Yeah.
With $75.8 billion generated by BNB alone, Changpeng Zhao's net worth has surpassed that of American philanthropist Julia Koch and her family, who hold a 42% stake in Koch Industries. His BNB holdings are no longer just assets, they're more like an on-chain money printing machine. Analysts point out that BNB's recent surge is driven by on-chain metrics like TVL, stablecoin market capitalization, and PancakeSwap trading volume, all reaching new highs since 2025. This, coupled with token burns, has driven prices even higher. Some people joke that while others rely on market luck, he relies on his own token. But if Changpeng Zhao were to accidentally sell even a little, the entire crypto community would likely shudder. When it comes to privacy coins, Monero is definitely the top currency in the underground world. It is a well-known anonymous king in the crypto circle. It is almost standard in the deep web black market, and almost half of the platforms recognize it as the official currency. But Monero has been unlucky recently. On July 11th, Archetype Market, the world's largest dark web drug trading platform, was jointly seized by multiple countries. This platform relies entirely on Monero for transactions, with a transaction volume of up to $267 million, which can be called the PayPal of the drug circle. The H2 Miner botnet, which emerged as early as 2019, has recently jumped out and resurrected to secretly mine Monero. On one side is the black market cleaning, and on the other side is zombie mining. Monero has really been a big tree attracts the wind, and the wind is not small recently.
Qubic, which was once the #1 Monero mining pool, recently attempted to take over the network by incentivizing CPU mining, and claimed that the mined XMR would be used to repurchase and destroy its own token Qubic to optimize the token economic model. However, the plan was frustrated, and Qubic's ranking has dropped from the 1st to the 7th, and its computing power has greatly decreased. Project developer Sergey Ivanchiglo admitted that there was an intention to take over, but announced that Qubic would stop disclosing computing power data from July 31st, making it difficult for the outside world to assess its control. He also said that he was dealing with an attack initiated by himself, and emphasized that this matter has far-reaching significance for the crypto industry.
Governments across the globe are ramping up surveillance. In the UK, Apple was forced to partially remove end-to-end encryption, and in the EU, lawmakers are pushing for bans on privacy coins, labeling tools like Monero as threats instead of protections.
Qubic wanted to seize the dominance of Monero by spending money to collect computing power, but it failed as soon as it appeared, falling from the leader of the mining pool to the 7th, and was directly rejected by the community. What's more outrageous is that the project founder, Sergey Ivancheglo, was tinkering with the attack on the Monero network while studying how to defend against the attack he launched. He was a negative example of self-directed and self-acted. He even suspected that someone offered a reward to him on Reddit, worried that XMR would be hit by the market and his own people would be pitted by himself. This operation caused some investors to panic and sell, and the market fluctuated in the short term. The deeper problem is, if buying computing power with money becomes an unspoken rule, not only Monero, but the entire decentralized ecosystem may face the risk of being taken over by capital. Monero was originally on the edge of the regulatory red line, and this incident is likely to increase the regulatory firepower again.
HKEX is big this time, going straight to the UAE to give the green light to. Futures, perpetual swaps, and options are all listed online, and you can play with up to 5x leverage. It is going to take the Middle Eastern rich to surf together. The Hong Kong Monetary Authority released the regulatory details of stablecoins today. The first batch of licenses is pitifully small, and the market was specifically warned, don't speculate blindly. It seems that if you want to get a license, you must first learn to be well-behaved.jpg. Unexpected, right? CryptoPunks, a group of digital geeks, suddenly exploded last week, with trading volume soaring to $24.6 million, a new high for the year. It seems that in the NFT world, veterans still reign supreme. Coinbase is too lazy to develop the Indian market from scratch, so it directly approached CoinDCX to discuss acquisition. This operation is just like playing Monopoly. Just buy the good location when you find it. The Fed is likely to keep interest rates unchanged again this week. However, Waller and Bowman, two bigwigs, may jump out in object, making the drama comparable to a palace drama.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.